So trade, top of the agenda at the BRICS summit in South Africa. And to talk more about that, let's bring in our business editor, Charles Pellegrin. Hi, Charles. Tell us a bit more about what the bloc represents in terms of trade.
Well, those five emerging economies certainly have a lot of heft, especially when considering that they represent about 41% of the global population and 24% of global GDP. Looking at actual exchanges of goods and services, though, the bloc represents 16% of global trade. So boosting that figure by further promoting trade within the BRICS bloc will be high on the agenda this summit. South Africa is actually hosting a trade fair in parallel to the event to showcase products and services from member countries. And in terms of trade talks, the host country is eager to address what it says are trade imbalances with other BRICS countries. South Africa is looking to diversify its trade because currently its exports are dominated by primary products like minerals and metals or agricultural products that we saw in the report, and its imports are mostly manufactured goods, for instance, machinery from China. To address these concerns, Pretoria and Beijing actually signed a deal ahead of the summit last week in which Chinese companies committed to buying $2 billion worth of goods from South Africa. One other possible obstacle or hindrance to increasing trade to keep in mind, though, the downturn in the Chinese economy, the largest in the bloc, where domestic spending has slowed down to the extent that the economy actually entered deflation last month.
Now, another key issue there on the agenda is going to be trying to reduce reliance on the U.S. dollar, particularly when it comes to these international exchanges.
The U.S. dollar, as well as the euro's dominance, has been a major grievance for many emerging and developing economies. This is especially a problem when the value of the dollar increases against local currencies, making imported goods more expensive, as well as paying back foreign debt. This is something that's happened in the past year or so, as the U.S. Federal Reserve has been increasing its rates in order to battle high inflation at home. On top of that, Russia is obviously looking to reduce the dollar's dominance because it's been the subject of financial sanctions by the U.S. on dollar transactions. Brazil has floated the idea of creating a currency for the bloc, a common currency for the bloc, in order to reduce that dependence on the dollar, but that idea has been dismissed as being impractical considering how varied and different the economies within the bloc are. Instead, the favored route is to increase the use of local currencies in trade within the bloc and to boost lending from the BRICS Bank, the new development bank, which is headquartered in Shanghai and serves as an alternative to the World Bank dominated by the U.S. It's set a target to increase local currency lending from about 22% to 30% by 2026. And some examples, the bank will start issuing its first rupee-denominated bonds in October and issued its first rand-denominated bond last week. But there's a long way to go. The U.S. dollar and the euro dominate global transactions, as you can see here in this chart. In 2021, the greenback represented over 40% of transactions, while the euro represented over 35%. The Chinese renminbi came in just under 5%.
All right, Charles, thank you for that. That's our business editor, Charles Pellegrin.